Okay, good morning everyone. It's Wednesday, July 14th, 2021, and we're going to get started here with our pre-market analysis on the S&P 500 futures market. So we're going to jump up to our ultra high time frames and just take a look at the larger picture here. Quarterly looking even stronger than ever here. Monthly looking also very strong. No signs of exhaustion on any of these ultra high time frames, including the weekly. If you guys remember back to a few weeks ago, pretty much every new bar was giving us some bearish indications. Really never led to much of a pullback. I think we had this 42.50 to 41.50, and then eventually, so just over 100-point pullback, and then things just continued to go here. And so right now, things looking very strong on all three ultra high time frames. On our daily, remember yesterday we talked about the potential of a bearish indication off the high. That did end up following through for a pretty decent sell-off that morning. But overall, if you look at the signal, it ended up, in my opinion, getting negated here because RVI continued to push. We did not get a nice clean peak right there. And so I'm going to go ahead and remove that. And what we have today is this push from this previous high on July 7th. We've now pushed up to a new all-time high at 83.75, but from that previous high we also pushed to a new high as well. So we're going to go ahead and get rid of any of those bearish indications, and really this morning we're looking at pretty strong in the daily as well. So really no strong indications of bearishness right now. And so all the high time frames are looking strong until we get down to our 4-hour, where we get a little sign of exhaustion, and that sign of exhaustion off the new all-time high it occurred somewhere around 9 to 10 in the morning. And so this bearish indication led to a sell-off from 43.80 to about 43.50, so a nice little 30-point sell-off. And now it looks like we're basically retracing that whole move down in the pre-market session now. So we didn't necessarily get a nice strong 4-hour indication off that overnight low, but we will see it as we dial down to the shorter time frames here. So from the 4-hour perspective, we just have a nice clear bearish indication off the all-time high. And really nothing else outside of the bullish indications we got all the way back on July 8th and July 9th that we talked about last week. So let's go down to our 60-minute. 60-minute agreed with that bearish indication that led to that 30-point pullback. And then in the overnight session, that overnight low there, let me get the actual number, 43.50 here, we got a decent bullish divergence. Not a very the strong kind that I like, but from the subsequent two bars here, we definitely do have a push higher in RVI, a push lower in price. And so we do have the argument for a bullish indication off the overnight low on the 60-minute. And as the market pushed here, we don't necessarily have any strong indications of exhaustion. No signs that we should potentially reverse from this area. So let's go down to our 30-minute and take a look at their intermediate time frames here. And we essentially get an agreement with the 60-minute. So a nice clear bearish indication off the previous daily high, and then a decent bullish indication off of the overnight low. That it's kind of formed right around 43.53, an interesting level we've had on our charts, and then continued to follow through a little bit lower again to that, what was it, 43.50, and got completed the bullish indication. And now here we are pushing higher. No indications of exhaustion up here. We are just about testing the highs on RVI from where we got the bearish indication back here. So maybe somewhat of an argument that we've got a push lower and somewhat flat here on the RVI. Let me just get the actual number, 62.8, and the number here, 63. So it actually pushed up just by less than a percentage point. So there is maybe somewhat of a bearish indication right there. This I don't expect that to follow through, but we do have to kind of at least identify that for now off of that candle. And then let's go down to our 10-minute here. So 10-minute off that high, no agreement. There also was no agreement on the 60-minute, so this 30-minute is kind of the outlier. But the 10-minute does agree with the 30-minute and the 60-minute and the 4-hour with that bearish indication off 83.75. And then it agrees with the 60-minute and 30-minute with that bullish indication off the overnight low at 43.50 here. So we don't have our high time frames giving us a nice bullish case from here, but as we dial down the 60-minute, the 30-minute, the 10-minute, and we might even see it on the 3-minute, some decent bullish indications from there. So nice response from those signals. And right now, like I said, outside of that one argument that could be made there on a 30-minute, no other time frame is showing bearishness off of the current high that we just made, maybe just about 15 minutes ago. So I would expect this to continue to go higher. That doesn't mean that we're not going to have some type of pullback. I went ahead and put a retracement up on here, and so 38 brings us right back into the previous highs that we had some trouble at, right around 43.69. We came right up into that level, got a shallow pullback, and then continued higher. That 38 does line up with that. The 50 and the 61 also line up essentially with some of the other previous resistances in the market. So this general area back here definitely looks nice for a bounce. And I did go ahead and mark the 50% of the previous 4-hour candle. So that 3 a.m., that 4-hour candle that closed at 3 a.m., 50% of that is right here at 43.58. So just a tick above our important level at 57.75. It also lines up with some decent, if you look into previous price action here, this general area from 56 to 58 right there, really good resistance, really good support. Broke it by a point and then bounced back here. Really good resistance. We go back to July 11th. That's exactly where we pushed up to. I think that's where I identified 57.75 as being a pretty important level. So that might be a little bit of trouble for any type of bearish movement here. So we'll have to watch that. But overall this morning, we are stuck in somewhat of a situation where pretty good bearish indications, more so than bullish indications off this low. So if the bulls do go ahead and push up here, they're going to have to break through 83.75. Pretty much the same situation as yesterday. If we can get through the previous daily high and we can hold above it here, then we will continue to, it looks like we should continue to carry on, but we will be heading right into what looks to be somewhat of a congestion zone here where we could have a little bit of trouble and some sideways movement just based on the prediction points. I know there are some of you that are in Ephraim's prediction point course that started yesterday, and this is one of the first things that he mentioned was when you have a number of prediction points close together, you could expect a little bit of choppiness in that area. And then once we do get above that general zone, notice 100% extension of the current leg brings us right into that next prediction point above 4,400. Down below here, if we do get through some of these areas, getting through that 43.50 is going to negate a lot of the bearish indications. We do want to keep in mind that overall we have the entire leg. So from where we got the most bullish indications down here off these lows of July 8th, if we look at the whole leg itself, 38% would bring us right back into the lows that we made on July 12th. So maybe not the most clear signals this morning as far as total agreement. We have more agreement of a bearish case off the previous daily high than we do off of the overnight low. So we're going to have to watch these two levels here. And as usual, as we get closer to the open, we will go ahead and dial down to our short time frames and see if we can get a nice clear trade going just before the open or going into the open. And that's where we will leave it for this morning.